Some of you have been hearing about the massive price increases in some crypto assets, and with Bitcoin, the largest, up 300% so far this year, and Ether, its sibling, almost up 700%, and Ether's almost up 3,000%. And you're probably asking yourself, is this a bubble, or could it be that this time it's different? And we have the perfect panel today to talk about that. I'd like to invite them to join me on the stage. Thank you. I'll introduce them very briefly, and I'm going to keep it brief because we have a lot to talk about, very little time. On my left, we have David Chaum, who is a world-renowned cryptographer and privacy technology expert. He invented the world's first cryptography-based electronic cash and is currently CEO of new social media system Privategrity. On his left, we have Alex Kong, who is the chairman and founder of TNG FinTech Group, which recently completed Hong Kong's largest ever Series A round of $115 million. And then on the far left, we have Chris Burniske, who is partner at Placeholder, a crypto asset venture capital firm, and co-author of a recently published book on crypto asset valuations. Thank you all for being here. I'm going to dive right in because, as I said, we have very little time. David, I'd like to start with you. Of all of us here, you are the one who has been looking at the concept of digital currency the longest. You created DigiCash back in the 80s, which was one of the building blocks of Bitcoin. So you have a unique take on both the barriers and the need for a robust digital version of cash. Can you tell us why you think we need it, and do we have it?
Well, thanks. Actually, most people don't realize that the idea of a number that is worth money was something that I created, and Deutsche Bank issued Deutschmark-denominated e-cash in the early 90s from our company, and in many other continents there were other major banks issuing it. Plus, we had our own non-bank cryptocurrency, which was called Cyberbucks. So that was quite early days, and I think that it's quite telling that Bitcoin emerged with such interest around 2009, where the existing financial system was showing some of its weaknesses. And I think, to answer your question directly, are we there yet? I think the size of the financial services industry will give you a sense. These are very early days with electronic currencies, and I think we're going to see, maybe I have some ideas about this, far more sophisticated products in the near future, and I think this technology will be a very important part of kind of equalizing the pressure that a lot of people feel with the way society is going currently.
Thank you. Thank you. Chris, you're one of the foremost analysts in the crypto space. You've been looking at this for longer than most. You also, as I mentioned before, recently co-authored a seminal work on cryptocurrencies as an asset class. So you've seen the plumbing, so to speak. In your view, why is there so much froth, and is it a help or a hindrance to cryptocurrency development?
All the best technological revolutions are accompanied by a lot of froth. Another way to think of it is speculation lays the foundation for innovation. And a framework that I like to use for approaching these markets right now is by a framework by Carlota Perez and her book, Technological Revolutions and Financial Capital. And in her book, she lays out these 50-year techno-economic paradigms which have 4 stages. And the first 2 stages are eruption, which is mainly the early innovators tinkering and proving out the viability of the idea. And that transitions then into frenzy, which is really where the financiers start to get wind of the innovations of the entrepreneurs, and increasingly financial reality will divorce from physical reality, and this will grow and grow and grow until there's finally a pop, and then a recomposition, and then we start to hit the synergy stage. So generally, I would say this is par for the course. We saw it in railroads, we saw it in the tech and telecom boom, and now we're seeing it with crypto assets.
Interesting. Alex, you bring end use case experience to the table. Your company offers a wide range of financial services across Asia, blockchain-based and not, with a focus on the unbanked. What do you see as the potential for cryptocurrencies from the consumer point of view?
This is very interesting. There are close to half of the world's population do not have bank account, more than 2 billion of them. And for the last 18 months, we've been growing at more than 50% monthly compounded growth. And our current transaction volume, moving money across border from one country to another country, is more than 200 million US a month, and still growing very fast. So what we experience is we always have to use the local currency here to buy in US dollars, and then from US dollars to buy into the other local currency. So the buying and selling, we actually incurred exchange loss of 1.4%. So we see the potential in cryptocurrency, using cryptocurrency to move the fund around the world without going through, basically we see the opportunity to disintermediate US dollars. Imagine saving a 1.4% from the exchange loss. There is tremendous savings, not only to the company, but especially to our users, the unbanked populations, moving money without cost on the real-time basis.
And the impact it could have. Chris, what would it take to derail the momentum, the enthusiasm?
I think to answer that question, we have to separate the movement into two parts: the market movement versus the developer and entrepreneur movement. And the market movement can be derailed by many events. As Benjamin Graham wrote, Mr. Market can be mercurial. And so things like new regulations or hiccups within scaling or exchange hacks, any number of things can cause temporary turbulation within a secular uptrend. So again, sort of going back to the froth, to be expected, and it's going to happen again and again, and these markets have proved to be very resilient. On the developer front, I don't know that that can be stopped at this point. You know, the web is really hitting a maturity stage. There's a consolidation going around with the FANG stocks, and you've got a lot of pent-up entrepreneurs that have realized the promise of blockchain technology or many of the components that Bitcoin brought to bear. And so their enthusiasm through thick and thin, from my interactions and being part of the community, doesn't seem like it can be stopped at this point.
David, one thing that people do mention as a potential derailer is regulation. Do you see a role for regulation in this space?
That's a tough question. Again, I think these are very, in fact, early days for the true power of these technologies to be realized. And I think that there's a tremendous amount of good that they can do. And I think it resonates with a lot of social trends. So I'm hoping that it's not something that's going to fragment society or lead to a worsening of a lot of social inequalities and problems, but rather something that's going to be the gem of a movement that will move the world in a much better direction, and therefore I hope there will be a resolution and not a confrontation.
Maybe I can say something, sharing something. We are providing financial services. Therefore, we are regulated across 13 countries by the local regulators because it's all about moving money. When I talk about creating our own cryptocurrency and moving money around, that certainly make the regulators uneasy because all of a sudden they feel that they're losing control. And yet we are trying to convince them that there is a real business application that can do tremendous good. But at the same time, they face the dilemma. If they allowed us to carry out our business, it means you also need to allow other companies to do the same thing. and those companies are not regulated. So if the company, the cryptocurrency operators are in the uncharted water, it bounds to create a lot of derail situations. A lot of fake currency or useless currency are too many flooding the market and creating damages. But it hinder at this moment the real cryptocurrency that has real business applications. So we see that the regulators are trying to figure out how this is the best way. They don't want to regulate it because it will kill the innovation, but they also need to regulate it in order to protect the interests of the consumers. So it's the dilemma right now. It's interesting time to see.
It's very interesting, especially given the global opportunity and the global technology that we now have. And you mentioned the fragmentation of the field. Chris, the inflow, the vast inflow of new cryptocurrencies or crypto assets, you want to call them that, into the market, do you see that as something that could help cryptocurrency development, or do you see it as a potential barrier to acceptance?
I think here the most important thing to realize is that not all of these things are currencies. So I think of cryptocurrencies as a subset of crypto assets, and a currency serves as a universal means of exchange, store of value, and unit of account. Then there are crypto commodities, then there are crypto tokens. So there's a very broad landscape. You can broadly think of them as decentralized information networks incentivized by a token. And within these networks, the code is not defensible because it's open source. The data is not defensible because it's shared amongst all the nodes. And it's the governance that is defensible. So with each new crypto asset that's launched, it's the governance that will draw new people to that network. And that won't, a new asset being launched that does something similar won't necessarily draw away from that governance.
Thank you, Chris. And I know that you all agree with me that we wish we had so much more time to address the infinite amount of questions I know we have for each other, and you no doubt have as well. But the time is up. The zeros are blinking at us here, and so we do have to wrap this up. I hope you all join me in thanking our panelists for giving us their time and their expertise.